On this week's show, we want to talk about Fargo-Moorhead's twin home market specifically. What's going on with twin homes? Do you own a twin home currently, or are you looking to possibly get into a twin home as your first investment? We're going to be talking about on the show today. We want to get into the question that came to us also. What would I do with $10,000 if I wanted to invest in real estate? I think our topic matter this quarter is right on par with this question. I want to do an expense breakdown on everything it would take to get into your first real estate investment before or while you're transacting, and a little bit after the transaction might be closed, what expenses might exist for you. And I'm going to end the show with a little journal prompt, get you thinking. As you know, welcome to this week's Midwest Invest Report. Welcome to the Midwest Invest Report. I am your host, Kyle Reedstrom. As you guys know, I've been doing this real estate thing for a while. We've even been doing this Midwest Invest Report thing for a little while, and I'm excited to come back to you with this week's content. You guys, let's get right into it. I want to get into our market minute. We're diving deep on the twin home market in Fargo-Moorhead. As I like to do, I want to share my screen with you guys a little bit. If you're listening, of course, follow along with the words. But if you're watching the show, which we have on our YouTube channel, you're looking for our YouTube channel. It's just my personal one, Kyle Reedstrom YouTube channel. Check it out. But you're going to see the market, my market map right here. Okay. And what I've done is I've searched for twin homes specifically. Twin homes are one of those things I like to keep a tab on because this is an amazing entry-level style home for people are the twin home builds. And if you're listening to this outside of our market, twin homes are commonly called townhomes. They're commonly called duplexes. We call them twin homes because a twin home actually is a connected house, two sides, but each side has separate addresses. It's actually a separate parcel property. And so we just call them twin homes, I guess. So in our twin home market, I typed in some simple criteria here, guys. We're looking at the MLS, typed in twin homes. I typed in under 2,200 square feet. Generally, when we're thinking of a twin home, we're thinking of that entry-level space, usually split, and about 700 to 1,000 square feet per floor. So that's kind of the range I'm looking at. You guys, 39 options exist right now. And the highlight I want to look at, pinpoint here that I'm seeing if you're looking at my screen, 0 twin homes in what we're considering our West Fargo market, as I'm circling it with my mouse. 0. So I love this market minute because if you own a twin home in West Fargo right now, what does that tell you? Supply is 0. So the demand for your property, this might be a nudge for you. You have a lot of, if you've got some value in that property, the market could be a really advantageous time for you to market your twin home that's in West Fargo. Okay, we see it as we sink south. Even Deer Creek, one of our popular entry-level developments just south of 52nd Avenue in Fargo, has no twin homes available. But in Horace, North Horace, and down in Horace, we see some options. And if we look at the list, as I pull this up on my screen, you'll see some of the newer style twin homes that you can see these concept photos right under 300 and around 300,000 that are going in Horace. Okay, so there's some new build construction that's available right now in Horace for twin homes, but otherwise it's pretty slim pickings. Okay, I want to do a quick search on this as well. If we go year built before 2022 or before, we're down to 18 options. And if we look just on the Fargo side, you guys, I'm seeing 1, 2, 3, 4 options for twin homes. If I'm gonna circle this up, you guys, I love diving into specific parts of our market because this is giving us knowledge on how things are transacting. Yeah, looked at transacting in our market. 4 available options. 2 of them are under inspection. You guys, the twin home market is pretty thin right now. It has been for the last number of years. And so, again, if you own a twin home, this might be a prompt for you. Hey, there might be some value and some advantages to marketing that property in 2024 or beyond, right? And if you're looking to get into entry-level housing, it's looking like more availability is going to exist in that new construction style around that $300,000 price point. And if you're looking to get into something existing, plan to spend $250,000 or more, plan for multiple offer situations, plan for it to be a very competitive place for you to go, looking for housing if you're looking for that twin home option. Generally, our single family and our twin home, as far as amenities and size, they're very similar. It's just that the single family is obviously not connected to another house. And generally, but our single family houses, I'll say it this way, our twin homes in our market trail our single families by, that $20,000, $30,000, $40,000 in price. So you can get kind of the similar amenities for $30,000 to $40,000 less. Obviously, that's creeping up a little bit as we go. But the cool advantages with the twin home, my wife bought a twin home when she bought her first house. She still owns that as a rental today. It's actually in West Fargo, so this is kind of relevant data for her. But the taxes are usually less because those lots are smaller, right? Smaller parcels. The special assessments in our area are usually less there. You guys, these are stacked spaces with a shared wall, so usually utilities is a little bit less of an expense. And as far as living and in space, you guys, it's an amazing amenity. I'm a big fan of twin homes as an entry-level property. I'm a big fan of twin homes as the beginning of a rental portfolio too, because you can live in it for a couple years and then go into your next place and keep it as a rental. Okay, so I'm a big fan of this twin home market. That's why I like to study it, and I wanted to bring that to you today on the Market Minute. So I'm going to unshare my screen, and we're going to keep rolling with this, you guys. Hopefully that gives you a little insight into our specific market. That's the goal of our show, right? Make you the expert of the market you live in. Okay, this week's content came from an amazing question. I love talking to some of our subscribers. You guys, if you haven't subscribed to the Midwest Invest Report newsletter yet, if you haven't clicked the subscribe button on our YouTube channel so you're following what we're doing, you're missing out. We want you to be part of our following because we want to engage with you, ask questions that are relevant to you, and bring that content to the show. One of the amazing questions that came up in a group I'm a part of was, hey, I've got about $10,000 and I want to get into real estate investing. What would you do? Okay, cool question here. I want to break down all the costs involved in getting your first house hack. And that's the alignment with our Q1 focus, our topic focus. Guys, because a house hack is one of those real estate investing tools you can get into early on in your real estate career that can be an amazing low down payment version of real estate investing. So I want to break down the cost because I don't think that's something we've done yet, is really get into the nitty gritty on what does this cost to get involved with. Okay, so you got $10,000 saved up. You've done the work there. And now what do we want to do? Well, the process begins with a real estate agent and financial approval. We know that much. The cool thing about that is when I wrote those things on my sheet, real estate agent, financial approval, they're both free. You guys, this is just you building your team. Okay, so these are free items. You're not going to have a cost with getting a pre-approval. There might be a credit pull. Always ask if it's a hard pull or a soft pull, because you just wouldn't want to go do a bunch of hard pulls on your credit to get different approval letters. Can have a negative impact on your credit. But both of those things, getting financially approved with a bank and finding that real estate agent that you want to partner with, those are going to be free. Okay, then we're going to get into looking at deals, analyzing opportunity. That is also free. Okay, so we're not even getting into any cost yet. You guys know this, but I just want to be redundant with this, saying, hey, you can get a lot of these balls moving without costing you any money. Okay. One thing that always comes up with the real estate agent part, by the way, is, hey, when do I pay this person commission? Remember, if you've never done this before, buyer's agents get paid from the seller on the commission. Okay, so they're representing you as a buyer. If they bring you to a property on the market, the seller has already agreed to pay a buyer agent commission. So when that seller decides to sell their property, they're advertising that commission they're willing to pay to a buyer broker. So as a buyer, you don't have to directly pay your buyer agent. That's kind of built into the property that you're looking at in the pricing that they've already had in there. So remember that. There's no out of pocket there. So we're looking and analyzing deals. You guys, I want to get down the sheet here a little bit. And we're going to get into offering on property. So let's say you go and find that duplex, you find that single family home, you find that house hack opportunity, because this is the route we want to go to start our portfolio. And that offer, you're going to put in that offer. If it gets accepted, there's going to be a thing called earnest money. Okay, earnest money is going to be the first time you have to write a check or pay money as part of this transaction. Earnest money is called earnest money deposit for a reason. It's going to be treated like a deposit on the purchase you're about to walk into. That earnest money always goes toward your down payment in the end, but that is coming out of your checking or savings account at that time once you have an accepted offer. Earnest money is generally going to be around 1% of the price. So I want to use the number $250,000 property. That's $2,500. That's your check. Remember, that's going to go towards your costs at the end. So we're up to $2,500. You got to have that saved. And remember, the question was around 10, so we've got it there. Next step in any offer process is the inspection. Generally, any offer is going to have a 10 to 14 day inspection period for you to do your due diligence on the property you're about to buy. That inspection, we're seeing costs be from between $400 and $500 up to even $600 if you're adding some things on. So that general house inspection, let's use $450. That's going to cost you $450, and that's just your cost. That's not a cost that comes through the bank. That's not a cost through any of the real estate professionals. That inspection is on your behalf, and that's a report that you will own at the end of that. That's a service you're hiring to do your homework on this property. And a couple things that are common add-ons for that inspection are radon testing and testing the sewer line, getting a camera in the sewer line to check out if the sewer line from the property to the street is flowing well and it's in good condition. The reason we want to check on these things is because if it wasn't and you have to replace it down the road, that's a very costly, like up $8,000, $10,000, $12,000 to replace a sewer line, and they got to dig up your yard, and it's a whole thing. There are other options out there, but generally it's a big project. And so you want to inspect these things so you know what you're getting into, especially with older properties, you guys. Look for trees in the boulevard. Properties older than 50 years had different style of piping that they used, different metal, different clay piping. It's not all modernized, so you want to look at these things. We really heavily recommend some of these extra inspections. So like I said, $400 to $600 on inspecting that property, and that's going to be an out-of-pocket cost. Okay, so we got our $2,500 earnest money. We've got our inspection costs. What are we looking at next? Next, we've got the lender fees. If you're going to be borrowing money, there's going to be a cost involved with this. And so we want to account for that. The lender costs are what we call closing costs. And not to be confused with cost to close, which is your total at the end of a transaction. Very confusing. But lenders are going to have what's called closing costs. And they kind of pile it all. And as a general rule, it's going to be 2 to 3% of your purchase price. Not always, but that's general, 2 to 3% of your purchase price. So 3% of our purchase price would be $7,500. And so we have $2,500 in. We've got $600 that we used for the inspection. And then we've got these closing costs coming up for around $7,500, right? Remember, our earnest money goes towards all of the costs that are due at the end. So that $2,500 is still a credit for us. And this is one where you guys, we can get closing costs negotiated on the right properties to be paid by the seller. This is the most common thing we start with in a negotiation. If it's high days on market or if the property's been sitting, if we're not in multiple offers, this is something when your agent, your real estate professional, can try to get the seller to pay those closing costs or give you a credit for them. Definitely ask about that. That's a very common thing that we're always shooting for. What I want you to be prepared for is that 2 to 3%. The breakdown of that, you guys, generally lenders charge what's called an origination fee. That's a lot of times 1% of the loan amount or the price. That appraisal, those appraisal costs went up. Appraisals are now upwards of $700, $800. And that's built into those fees. You guys, and there's going to be costs and fees from the closing company that's actually closing the deal for you between the two parties and transacting that deal. So origination, appraisal, closing company, that's going to all make up all these fees that are called closing costs from your lender, okay? And again, this can be zeroed out if negotiated the right way. Okay. So we've got that on there. And the last thing that I want to touch base on as far as breaking down how you're going to use your $10,000 is your down payment. Okay. So in a house hack, we're using the minimum down payment to get into our first investment property. So that's 3%. But guess what? North Dakota and Minnesota both have home buyer assistance programs that can actually take that from 3% all the way down to 0. So you got to ask your lender about these programs. Theoretically, you guys, these last two, down payment, which is 3%, and closing costs, which is 2 to 3%, they can both be 0 in some situations, and we see this commonly. But I got to lay it all out here for you guys. So 3% of our price is about that $7,500 again. And remember that $2,500 is coming towards that amount. So breaking all of this down, you guys, the way that I like to keep this really simple is if you get your closing costs, if that's a criteria for you, we want to get our closing costs negotiated, and you just, and that's not on the table for you. Really, the only costs you have are your inspection and your down payment. Okay? And I have that as $600 for inspection on the high end, and that's $7,500 down. If you get closing costs negotiated and you use one of the assistance programs for your first house, which has income limits, right? You got to see if you qualify. The only cost to you would really be your inspection costs and maybe some small closing costs, and you'd get most of your earnest money back at closing, the $2,500 that you put at the beginning. Guys, these scenarios exist. If I just lost you in the weeds a little bit, you guys, I love to answer some of these questions. Might have to re-listen a little bit, but just I want to review. If you're able to negotiate closing costs for the seller to pay, and you're able to qualify for a state, North Dakota or Minnesota assistance program that gives you a credit for your down payment, which is 3%, all you have to pay is your inspection fees. And this is a real situation. So you guys, the range in which you could use your $10,000, if you don't get your closing costs negotiated and you have your down payment burden still, I'm looking at around $15,000 to $16,000 in costs. So your $10,000 wouldn't get it done. But if you get one of those things, if you qualify for one of those things, the assistance program or the closing costs get negotiated, you're definitely under that $10,000 threshold, and you are into your first property, building equity, hopefully cash flowing, and moving your portfolio forward. And that's what I wanted to break down today. Amazing question. I love talking through this stuff, you guys. Hopefully you follow. I want to leave the show today with a journal prompt. And I have a true belief, you guys see it come through in the Midwest Invest Report newsletter and on the show here, that reading is a superpower. And actually, I have a strict rule that I operate off of, which is I only read 10 pages or listen to 10 minutes of a book per day. It's a maximum. I don't want to do more. I want to create a thirst and a hunger for consuming that knowledge the next day. And I want consistency in my life when it comes to reading and things like that. So my journal prompt to you is along the lines of reading. Everybody out there might be reading a book. You might be a growth mindset individual. And my question is, what's one book you need to reread? Okay, the crazy part about books is, yes, they stay the same. The content stays the same. But us as people are all constantly moving forward and backwards and sideways and all around in life. And so the book might be the same, but you're in a different place. And I want you to think and journal on what's that one book that you need to revisit. What's that one book that needs to become mastery for you or hit you at a different season of life? Hopefully you're thinking about that. I know I'm thinking about one right now. It can be in business. It can be in parenting. It can be in fitness. It can be in life in general. It could even be fiction books. I mean, sometimes these fiction books that we read as kids can really get the creative juices flowing for us as adults. My challenge to you is to answer that question and maybe take some action on it. Awesome. You guys, the last thing I wanted to say in line with our content is when it comes to costs with that property, that's all of the transactional costs that you're going to incur. But there are some costs maybe after you close that I wanted to touch on really briefly, which is when I got into my first fourplex, which was a house hack, I had to account for lawn and snow. I was going to self-manage, so I needed equipment to do that, whether it's shovels or snowblower. And then I did need a lawnmower that I picked up off of, I think, Craigslist or something. Okay, so you got to account for some of these costs. I also needed a rent collection and management system. A lot of these can be found online. I know one that we really like to use was Avail as a self-manager. Avail, I think avail.com, or if you Google Avail. You need to have some management software. It's going to make your rent collection and even leasing and doing background checks much easier. I actually used some signage, and I remember buying some signage, things around the facility and everything. So that's a cost. And then I also started getting my taxes professionally done when I got into doing, my investment portfolio, and that's a cost that you might need to budget for. So those are some of the things that might happen after. And of course, any repairs, maintenance, things like that, I want you to budget into your investment in the analysis there. Okay, you got your journal prompt, you got the content. This was the Midwest Invest Report. You guys, I can't stress enough, we want you as a subscriber. We want to continue to engage with you. If you're not getting our weekly newsletter, take some time, scroll down, click the link in the show notes to get on our subscriber list. We want to engage with you, and we love the content we're putting out there. It's the same and different than the show here. All the time, we're trying to bring as much relevancy to our market, our Fargo-Moorhead market, and the housing and investing industry as possible. You guys, it's been a joy to have you on the show again this week. That is this week's Midwest Invest Report. We'll see you next week.